Hello, this is Edmund Xing asking, have we finally hit bottom in emerging markets? Well, are we at maximum pessimism over Russia and China? This chart showing the Russian stock market dominated in dollars suggests that maybe we are. If we look down to the bottom right, this candle formation, which is called hammer, which is a small green body and a long green tail, suggests that we are finally hitting bottom and that investors are looking for a turnaround. Interestingly, the emerging market index overall in the US, the EEM, which is an ETF on emerging markets, has actually been generally trending higher even as Russia has continued to fall. Looking secondly at China, which has been a second worry over slowing economic growth in particular, we can see that yes, small caps, this line in blue, has performed very poorly, dragged down predominantly by banks. However, small caps, this green line, have actually done rather well over the last few months and actually remain in some sort of uptrend. So even for me here, it's not clear that China is all doom and gloom. Perhaps what we need to do is focus on the small caps, which after all are more directly exposed to the domestic economy. Thirdly, in terms of commodities, well, copper clearly has suffered from the worries over China. You can see this green line, the copper price has collapsed, but is starting to flick up, maybe has found a bottom. At the same time, however, the other commodities, and this has been represented by this commodity index in blue, has actually rallied to new multi-month highs. So it's not clear to me that there is a problem generally with economic growth as reflected in commodity prices. Maybe what we see in copper has been to some extent more technical in nature, driven by margin calls, and maybe we shouldn't focus too much just on copper right now. In terms of the safe haven trade, well, certainly people have been moving away from risky assets, given what's happened in Russia and Ukraine, and towards safe haven assets. Gold and silver, precious metals, has been one of those to benefit. You can see gold in blue and silver in green have both risen over the last couple of months, benefiting from the risk-off trade. And remember as well that gold is still very popular, particularly with Chinese consumers. We've seen rising imports of gold into China over the last few months. Government bonds in Europe and the US have also benefited. The Euro government bond index here in blue and also US government bonds in yellow have to some extent also benefited from this safe haven trade. But what interests me more on this page are emerging market government bonds. This is an ETF of emerging market government bonds denominated in dollars. And you can see that despite the travails, the worries in Russia and the worries over growth in China, this has been rising. Now it yields over 6% at current, so it actually, to me, makes a rather interesting value and yield investment right now that you should consider. Finally, the best performing developed markets indices for stocks are actually to be found in peripheral Europe: Portugal, Italy, Ireland, Greece, and Spain. Greek stocks in particular, this blue line, have been phenomenal over the last few months, but Irish and Italian stocks have also performed very well, all handily beating the benchmark Euro Stoxx 50 index, which has basically tracked just sideways over the last few months. So maybe we should be focusing there for our developed market exposure right now. Conclusion: emerging market stocks look like they may be bottoming out, both in Russia and in China. And in China, maybe we should focus more on small cap exposure rather than the banks. Yes, copper looks horrible because of China, but other commodities look somewhat better, particularly gold and silver. And this is an interesting trend given how poorly gold and silver have performed over the last few years. Some trade ideas might well be emerging market government bonds, particularly based in US dollars. In the UK, that will be the SEMB, Emerging Market Bond ETF. And in terms of stock markets, maybe we should look at peripheral European exposure, like Italy, Ireland, Spain, and Greece. For that, you could look at the DJSC, which is the Euro Small Cap ETF, which has more weighting towards these peripheral European countries. This is Edmund Shing saying thanks for listening and watching, and goodbye.